All right, welcome back, guys. I'm going to go over my Sunday charting analysis routine and analyze a higher time frame, bring it down to the all the way down to the hourly time frame, and analyze what I see going on for the week. So we're going to start with the weekly chart, go down the daily, 4 hour, and 1 hour chart, and we're going to run through these points right here. We're going to look for the closest inefficiencies, closest liquidity levels, and the order blocks, determine what is the order flow, and then determine what is most likely draw on liquidity. So to start, we have the weekly chart right here. I usually like to look back and try to find what are the closest points of interest to the current price level within 20 days. And then if I don't see anything in 20 days, go to 40 days and then 60 days, because those are the IPDA date ranges. So on the weekly chart, the closest thing is obviously this volume imbalance that we traded through last week. We wicked past it and closed the body within it, and now we're trading above this weekly volume imbalance. We have this fair value gap right here as well, and then this sell side inefficiency that we left a couple weeks back. And so this is a huge inefficiency here that we're going to want to reprice back into. And then today we're also gapping up, so we have this new week opening gap right here as well. Down here we have this weekly order block right here. For liquidity, I mean, I guess we have one down here, and we have some levels of liquidity right here as well. And then so next we're going to go down to the daily chart and see what's going on here. On daily chart for inefficiencies, we have this daily inefficiency right here that also overlaps with the weekly sell side inefficiency. And then we also have the daily volume balance. We traded through that already. That one's already mitigated. The weekly volume balance is also mitigated now. And then we also have this daily order block down here. But this also lines up with the weekly order block. So we'll just stick with the weekly chart for that one. We have this daily bearish order block right here that we traded up into last week. Traded up into it, traded past the new week opening gap here as well, and then rejected from it, coming back down into this volume imbalance. And then we also had this small daily and volume imbalance right here in the teal shaded box. That was pretty much the draw for last Friday, so we mitigated that. So now we are trading above that. And then so let's go down to the 4 hour chart and see what's going on here. 4 hour chart, we have this 4 hour order block that we are still holding below overnight. Liquidity, you can use, this level as liquidity. You can use this as liquidity. And then for buy side, it's up here. And then we also have this fair value gap on the 4 hour chart that was created from Friday's sell-off. And so we gapped up into it, didn't really get too far above it, just like tick above it. And then we rejected from it and we're trading back down. So we also have this huge new week opening gap, which also acts as a volume imbalance as well. So this is likely to be traded back into sometime this week. And we may bounce from here or trade through this, right? So I'll explain a little bit more on that later. So let's go down to the 1 hour chart right here. Lots of things going on, lots of inefficiencies being filled, a pretty efficient price delivery. But we also have this hourly fair value gap. The bodies don't really close past it, so we are rejecting that, coming down into this liquidity void right here. Okay, so those are the main inefficiencies and liquidity levels across the time frames. So now you want to determine what is the order flow across all these time frames. So on the weekly chart, this is obviously bearish because we have that market structure shift coming down here, and we've been selling off all of September. So October is historically a bullish month. Data shows that October is typically a green month. So I am pretty bullish on the month because we also have this huge inefficiency right here, which might act as a draw on liquidity as well. And if we go to NASDAQ, we can also see that on NASDAQ, we took sell side here, traded into this fair value gap, and we're pretty much bouncing from it right now. So ES didn't really take sell side the same way Nasdaq did. We got really close to this wick right here, but we didn't really um, take the liquidity from this low. But if you're using this wick, you can see that we are closing the body above the classical encroachment of this wick. But let's continue analyzing the order flow. The weekly chart is bearish. And the daily chart is still bearish because we're not going to be bullish until we get a market structure shift above probably this high, because this is probably the last high that creates the downside breaker structure. There aren't really many short-term highs in this sell-off move right here. So then on the 4-hour chart, this is where we see some changes. So recently we saw a market structure shift to the upside right here, because this is the last high that creates the downside breaker structure, right? And then we have this placement above it, the candles close above it. And you can see that we're holding fair value gaps as we rise up into this order block. Then we rejected this order block, and then we shifted market structure back down to the downside over here. This is the last low that creates the upside breaker structure, and then we displace through it. So the order flow is going to be bearish on the 4-hour chart as well, until we can get above either this high or that high, right? So until we can get above this order block, we're still going to be bearish. And if we're bearish, we're seeking some kind of sell side inefficiency or sell side liquidity. And so that inefficiency may be the new week opening gap. We may just fill this and bounce back up, or we may come down and take one of these liquidity levels. Now the hourly chart, pretty similar story. This is the last low that creates upside breaker structure, displace through it, and then we're holding these fair value gaps as of now. So with this, we don't really have too much price data to go off of just yet. So I'm pretty much long on the month though to see us reprice back up into the upside inefficiencies, namely this sell side inefficiency on the weekly chart. And I ran some fibs from this entire swing move right here. And the 50% mark right here, equilibrium, lines up with the midpoint of this fair value gap as well. So I think we're going to trade back into some kind of a premium of this range. Maybe go up to the golden pocket as well. And then potentially we may come up to here or there and then reject back down towards this level right here. So the negative 236 fib level lines up with this weekly order block down here as well. And we have, lots of sell side liquidity right here because we have lots of equal lows or relative equal lows down there. So I'm pretty long on the month. And so you can treat this new week opening gap as the equilibrium level of the week. And so if you're long on the week, then a good place to buy would be below the new week opening gap. That would be considered like a discount zone. So if we come down and sweep, liquidity down here, this would be a great place to buy. But as of now, I like to wait to see how Monday plays out so we get some more data and determine what kind of context we're in to see if we're going to want to take out some sell side or if we're just going to trade past this order block and go for that repricing into the fair value gap up here.